Welcome to TheoTrade. This is Don Kaufman. It's March 11th, 2019, and you are watching the TheoTrade evening video. Well, after a considerably rough week last week, we kick off this week with an explosive rally back to the upside, but there's a lot more going on than I think meets the eye. First and foremost, let's discuss a little bit about the S&P futures, which again closed up about 35. 1.3%, Nasdaq up about 1.9%. Obviously, the Dow being the laggard today. We'll get into that here momentarily. The first thing I want to bring up inside of the S&P futures, this happens to be a quarterly expiration week. Now, that doesn't sound like much, but what we're going to learn here in just a moment, well, it means everything. One of the first things that you have to be able to decipher about these quarterly expiration weeks is that volume, well, there's a roll going on, and that is you've got a lot of traders that are rolling from the March contract into the June contract. What that effectively does is it makes volume absolutely impossible to read through. So if you're trying to read through like, all right, are there a lot of algorithms trading this week? Like, you know, what's going on in terms of intensity of trade? For those of us that look at that, you can't read through the volume at all. Now, that's only one of the issues kind of facing us with, again, quarterly expiration in the futures. I always like to reiterate, if you're unfamiliar with quarterly expirations, I should say, in the futures, you know, roll them if you got them. Like, listen, if you're in a March, okay, and you want to sustain that particular trade, you got to roll from March to June to the SEP to the DEES. Okay, obviously, quarterly expiration is here. Very often you'll hear people talk about what they call quadruple witching. It's really triple witching. Nevertheless, I'm going to talk about that here momentarily because it really matters in today's trade. So what really kind of led the pack today? Well, before I get to detail in terms of what led the pack, well, what didn't? Obviously, it's, you know, Boeing, which was getting whacked back and finished the day substantially higher than it started, down about 5%. You guys know I've been incredibly critical of Boeing. Now, this is an underlying, again, that dropped substantially, rallied back on the day, but that was weighing on the Dow throughout the course of today's trading action. Put it aside right now. Yes, I am still maintaining short positions inside of Boeing. We'll continue to maintain short positions inside of Boeing, but again, I want to push that aside because it wasn't necessarily in play. The next thing I want to actually cover happened to be the financials. And the reason that I want to key into the financials, what has led this market lately, has been everything to do with these financials, specifically what led us down in much of last week's trade, okay, was financials are right on the forefront of it in terms of sell side activity. Now, did financials rally today? Absolutely. But one thing that I always feel is also very critical as a trader to pull up, I like to look at everything in terms of percentage change. Okay. And in a day like this, we have this wicked rally when you're looking at the, the S&P is up some 35 points and up about 1.3%. Okay. You're looking at the financials on the lagging edge, okay, of the movement inside of the S&Ps today. So what gives? Well, your sector that's done a whole lot of nothing lately, which is specifically the Nasdaq, and I say the Nasdaq has done a whole lot of nothing lately. Let's just kind of recap, if you will, the last, almost month of trade in the Nasdaq. Now here, I'm all the way back, again, literally a month in time, and I'll kind of zoom in on this entire last month of trade. We've had some fairly tight ranges. Obviously, today's trading range is expansive, taking us to the upper edge of the range that we've seen at any point in the Nasdaq. So the Nasdaq comes out of the woodwork, explodes to the upside. There, okay, in lies, all right, what really drove most of the order flow to the upside today. Now, with that being said, so we know what's recently led the markets have been the financials. They're not really in play. In fact, they're the underperformer today. You want to get really specific, it's the monsters of tech. That happens to be Microsoft, okay, Apple, Facebook, Amazon, Google, that really exploded back to the upside. And again, these underlyings haven't been in play. I think the best way to kind of delineate that is to point out, take a look at Amazon, which has been trapped in a range between 1,600 and about 1,700, obviously having an explosive range back to the upside today. Again, not breaking the range per se, but these are underlyings that have not necessarily been in play. Apple receiving a number of upgrades today, kind of breaking out possibly to the upside over here. But before we go any further, this explosive rally kind of sets up some trade opportunities over here. And there's one thing I don't want you to forget, and that happens to be inside of the SPX. So let's go ahead and let's zoom into the SPX today. Now, you guys know that I look at expected moves, okay, a substantial amount. Now, what was the expected move for this week of trade? When I say this week of trade, I mean, listen, every single weekend I come in here and I draw these lines. Okay, what are these lines? Well, that central line right there, that's where the week starts. Okay, then we have the upper edge and the lower edge of the expected move. It's what the option marketplace kind of depicts risk to effectively be. Now, one thing that stands out this week more than most in terms of expected move is, again, we have a quarterly expiration. What that effectively means, that I'm going to cruise over to the options in the SPX. Okay, I'm going to close up this left side bar, and I'm going to show you what's different this week is, yes, there's a Monday expiration, and then there's a Wednesday expiration, and then there's a Friday expiration, but there's also a Friday AM settlement expiration. Now, that Friday AM settlement, that's your standard monthly options. Now, this is one that most of the time I suggest we don't even necessarily trade, but it's where some of the biggest traders in the world, okay, go to offload risk. The other thing that is incredibly important to be able to discern about that Friday AM settlement, that option has been around for more than a year. What I'm showing you down here, okay, down below over here, here's a March, that's already for next year. Okay, so given the fact that this option has been around for over a year, what would you expect its volume and open interest to likely be? Huge by huge. Absolutely massive volume, massive open interest. Just let me for a second open up all strikes. Okay, we are talking about tens of billions of dollars that are being traded, okay, in this one expiration cycle. You're like, really, tens of billions? Oh, I don't know. There's an 1800 strike. 1800. Don't worry. It's only 1,000 points out of the money. 20,000 contracts. As you start to scroll through here, okay, yeah, it's good for 100,000 contracts. Okay, there are hundreds of thousands, even millions of contracts that have been traded, okay, in these March options. Now, to be consistent on a week-to-week basis, to be consistent with my expected moves on a week-to-week basis, I use the standardized, okay, Friday PM settlement contract. However, you have to recognize that in the monthly settlement, and even more importantly in the quarterly settlement, these expected moves, okay, in the AM settlement are going to hold tremendous weight. Okay. In fact, to kind of delineate this a bit further, I'm going to come over here to the SPX. What we're using right now happens to be Think Back. Okay, let me just highlight this really quick. So I went back to Sunday's trading session. This is Think Back. It's just end of day data. And I'll even close up, okay, those Marches. I'm going to open up the AM settlement Marches, and I want to show you the expected move. The expected move is right at around $40.67. Now, again, the one that I draw is the PM settlement. It's a little bit further out of the money, but I want you to see the close today. Up $40.23. Literally kind of felt like we got, stop right on the edge of that expected move. And we believe that throughout the course of this week, okay, that's probably, that upper edge there is going to give you just that, a tradable edge. And that it is very, very likely that throughout the course of this week, okay, even if we do crest above this, okay, that we're going to likely pull either to it or even inside the edge of the expected move. Now, what's likely to drive us, okay, back inside of it? Well, first of all, there's a tremendous amount of news coming out. But before any of that, I want you to think about the different types of trades that you can pull off, given the fact that we have, again, a relatively high expectation, if you will, of staying somewhere in and around or under 27.83. Again, every ounce of the expected move has already been hit today on a Monday. It's going to be a long trading week, right? Okay, wicked rally to the upside, but we hit the edge of the expected move. Again, tens of billions of dollars riding on the edge of that expected move. Nevertheless, okay, we could go out there. If we rally even further tomorrow, we could look towards bearish in-out spreads, rally up a little bit further. We could sell out of the money call spreads. Okay, we could even use something like a broken wing butterfly out there. Many of these trades will go over tomorrow. If we actually do rally, again, a bit outside of that expected move, I may even put a butterfly on the upper edge of that expected move with the assumption that eventually at the end of the week we pull back right to the edge of that. I'll even discuss which expirations are going to be most effective. Should I use the AM settlement? Should I use the PM settlement? All of that to be covered first thing in the morning tomorrow. Last but not least on that thought, okay, what can really drive us? Well, one thing I think you need to be mindful of this week, there are all kinds, okay, of binary events going on. CPI number coming out tomorrow. You know, normally on an evening video, I wouldn't mention CPI, okay? But lately, okay, good data has been bad for the markets. Bad data has been good for the markets. Hey, look no further, okay, than the German marketplace, all right? Look for no further than the German marketplace, which is up 0.75% on ultimately contracting their own GDP. Okay. On Wednesday, we also have binary event durable goods orders. There's a tremendous amount coming out in terms of economic news that it's going to be driving these markets. Nevertheless, again, all of a sudden the monsters of tech come to life. Okay. The financials lag. And in one day of trading, we hit the upper edge of the expected move. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.